I'm joined with Rob McEwen from McEwen Mining here at the Beaver Creek Precious Metals Summit 2024. Rob, thanks for joining us.
Happy to be here. Thank you.
So, Rob, the theme that we keep hearing from everybody we talk to basically is that there's this disconnect between the price of gold and equities. As we sit here, gold's hitting all-time highs, but we're not seeing a ton of capital flow into the equities names. You obviously have a lot of experience in the junior mining world. What's your read on what's happening?
I think it's natural progression. Investors were distracted. Well, they were focused on other parts of the market. You know, the tech side, the pharmaceutical side, some of the industrials, and we're seeing very small percentage ownership in gold. Everybody left it for quite a while, and the big recipients of the price of gold going up right now are the seniors. Their treasuries are growing very quickly. Yeah. The juniors are still hungry for cash. And I guess there wasn't a lot, they fell out of the sky at one point, and there's a memory investors have and saying, well, I'm not too sure I'm ready to go there. But you will see, I think, a natural rotation to the intermediates and then to the juniors. You're starting to see more M&A appear as the seniors who have the cash are looking in, where do I get growth? Where do I get more ounces or resources and more production?
So one thing that I commonly hear when I'm having conversations with people off camera is they'll say, well, the reason that there's no money flowing into the sector is because the sector's done just a terrible job of returning investment ROI. And something that I think a lot about is the reason that there's no capital flowing into the sector because management teams have just done such a bad job, or is the reason that management teams have done a bad job is because there's actually no capital?
There has been capital. I mean, there haven't been a lot of discoveries, but when there's been some good discoveries, you've seen the market react quickly, like Great Bear. Snowline, and a number of them like that, where money has gone there. The rest is sort of, I think investors are thinking it was like watching paint dry. The permitting process has gotten longer. The capital has been scarce. The cost has been going up. And I also think that the royalties and streaming companies have done a huge disservice to the junior and intermediate sector. They've ripped out the profit margin. They're a good vehicle for investors, but I felt a lot of the management of the intermediate and juniors that sold streams didn't take math when they went through school.
Yeah, I agree.
And you can see this tremendous divergence in performance of the streamers, and the royalties are way ahead of the producers. So we have a project, and we'll soon be rid of it, but I bought a property and it had an 8% stream on it. And we're selling gold at $600 an ounce to the streamer, giving it. And I'm going, oh, come on, this is terrible. In a year and a half, we won't have them. We'll be far away from that. And I'm happy, but it's done it to the industry. So people are saying, well, you gave away the upside. Why should I invest in you? And then there's just a proliferation. A lot of the juniors, their G&A is greater than, it's not giving a return to investors. I think they're going to get a reprieve. The higher price of gold, people are going to start looking and saying, that's an interesting resource. Is that something that someone might be going after? They've got a great drill hole. We weren't looking at drill holes before. It was like pushing a string. There was nothing happening. But I think with heightened awareness of the gold market, you'll see, and the silver.
So let's say you and I are sitting here at the same spot this time next year. Do you think that there's going to be a lot more euphoria and we're going to be seeing that capital flowing into the juniors?
I'll look at this show. Last year I came, and when I left, I thought, there are more company representatives here than there are investors. And this year, there are more investment bankers here, and there's still not a lot of investors. So I'm going, next year, hopefully, there are a lot more investors.
Yeah, that's a sentiment that I've heard shared here. So let's talk about McEwen Mining. There's going to be people who are sitting down and they're going through a video series this week, and they're unfamiliar with the McEwen Mining story, what's the high-level overview?
Okay, I think we're undervalued.
Yeah.
We represent deep value. We have precious metals that perform very poorly 2019 to 22. We didn't meet guidance, and the market reacted as it should. They sold us, and our share price just slid down. I call it the road to hell. We lost hundreds of millions of dollars of market value. And for someone, I have a $225 million cost of my investment in McEwen Mining and McEwen Copper. I felt it as much as our other shareholders. So we have precious metals, and they've stabilized. The costs have been stabilized. Production's increasing, and we can see our production increasing by a third to about 200,000 ounces 4 years out. And that's all organic. But we have a copper project that is huge. It's bigger than when I built Goldcorp. It'll be much bigger than that. It's called Los Azules. It's in a subsidiary called McEwen Copper. It's private. We're going to take it public next year once we get the bankable feasibility study and environmental permit. But if I were to make it a gold equivalent, it's 37.6 billion pounds of copper. So if you take the gold price divided by the copper price, you get a product. It's about 620 pounds of copper equals 1 ounce of gold. You divide that into the 37.6 billion, you get a gold equivalent resource of over 60 million ounces.
Wow.
And at a cost of $1 a pound projected, on a gold equivalent basis, that would be just over $630 cash cost, and all-in sustaining cost would be under $1,000. This has a 27-year life, and that's only mining less than 40% of the resource that we've defined there. It would be in the lowest cost quartile in the industry, and recently BHP and Lundin cut a deal that was worth about $4.4 billion, and our Los Azules project is got an implied market cap right now of $1 billion, but it's at our project is at a lower altitude. Top of Filo is base camp Everest. You're going to have some issues working there. We are a larger resource, based on published numbers right now, we're a larger resource than the combination of Jose Maria and Filo. We're closer to infrastructure, and we're a higher grade of copper. And we're taking this. A couple of years ago, I asked an architect who's considered to be the Steve Jobs of the green living building space, and I said, sit down with our engineers and our management, and I want you to help us to think about redefining mining and trying to transform the public perception, the negative public perception of mining. And so we're going to see a copper project right now. It'll be powered 100% by renewable energy, wind, solar, hydro. It will emit 1/3 the carbon right off the bat, carbon neutral by 2038. We've attracted global players. Stellantis, the 4th largest car manufacturer in the world, owns 19% of it. Rio Tinto, the 2nd largest mining company in the world, owns 14%. McEwen Mining owns 48%. I personally own 13%. And you're just looking at a big project, and we found what looks like another porphyry deposit 3 kilometers away, which we'll be drilling all next season, which will start in October. It's in Argentina, on the border. And Argentina they have a new president. Yep. President Milei has introduced legislation that is going to attract a lot of foreign capital, and BHP's deal with Lundin was the first manifestation of that. So it's very, very positive.
So let's talk about that. It's like we're talking some pretty big numbers here, and it feels like there is a bit of a valuation mismatch in terms of the company. What do you think needs to happen in order for the share price to be reflected in this value?
Probably more conversations like this. We're right now, based on the current financing we're in, the Los Azules is valued at just under $1 billion. And when you put that on a per share basis of McEwen Mining, that it's the price we're trading at right now in the market, just the copper. And then we have gold, and then we have a portfolio of royalties. When we separated the copper, I put a royalty on Los Azules, and over the 27-year life at 375 copper, that would generate about $450 million of revenue. I mean, you've got better than a 75% gross margin projected on this, a 3-year payback on a $2.5 billion investment, producing 400 million pounds of copper a year. Copper is, what, 412 today?
Yeah.
I mean, that's a massive deposit. And so we think the value of McEwen Mining, of course, we're biased, internal management is between $20 and $50 a share, depending on how you value some of the product.
Okay, so let's just say that I am an investor watching this and I find the investment thesis compelling. What am I looking out for over the next year if I'm trying to follow the company and evaluate management?
Okay. Well, on the copper project, before the end of the year, we're expecting to get the permit to build, the environmental permit to build. We'll have a feasibility study out early in the first half of next year. Expect an IPO there, so you'll have a very visible valuation of that asset. At McEwen's gold operations in Timmins, we're putting a ramp down to access the ore right below our mill. Currently, we truck it 30 kilometers to our mill for where we're mining right now. So we'll get rid of a stream, an 8% stream that we sell gold at $600 an ounce, awful price. We'll be able to, the ore is softer and the grade is higher. So you've taken out the transportation expense, you've taken out the stream, you can increase the throughput. We're spending about $15 million in exploration. There's 3 million ounces sitting between our gold assets, where we just bought Timberline in Nevada, and they're close to our Nevada operations, so we expect that to extend the life. Down in Argentina, our joint venture down there with Hochschild Mining, they're exploring and increasing their mill, so their throughput will go up. And in Mexico, we have an operation on care and maintenance, and we have a process plant there that we hope to bring back on stream. So when you take all that together, 200,000 ounces by 2028, from 130 to 140,000 this year.
And well, Rob, I appreciate you sitting down with us. You're always generous with your time, and I feel like you're one of the good guys in junior mining that have really done a great job of promoting the industry and takes time to chat with everyone. So I always appreciate that you do that with us. And hopefully this time next year, we'll be sitting down and talking about what a great year it's been in mining and what a great year it's been for McEwen Mining, with seeing the share price finally be reflected in the value that exists in the company.
Thank you very much.
Thanks, Rob.
Delighted.